I think the most exciting thing about the EV transformation is it's fundamentally going to change the way we make money at General Motors. Because if you think about it, the overwhelming majority of our profits come from the time that we sell a vehicle to a dealer, right? And that vehicle enjoys a lot of revenue for very different companies over the life of it on the road. What the electric vehicle and what connected vehicles are going to do for us is increase the revenue opportunities for us over the life of that vehicle. Second owner, third owner, fourth owner, because we're going to be able to offer ways through over-the-air updates to customize it, subscriptions, various services, insurance packages, lots of different ways that we can interact with the customer in ways that historically we haven't been able to.
How much of your top line, your total revenue, is going to come from selling vehicles as opposed to the services that you've just been describing?
So if you go back to our Investor Day last year, we talked about doubling our revenues while expanding our margins by 2030. The doubling of the revenues are coming both from growth in auto sales, because there's a big overlap and we're getting new customers every day on electric vehicles, the ones that we're taking reservations and orders for right now. So what we talked about is $20 to $25 billion a year of revenue in 2030 around these services that we can provide going forward. So it's a massive growth off of what we've currently experienced with OnStar historically, and really excited about what that's going to bring.
GM also expects significant growth to come from Cruise. It owns 80% of this startup that's developing autonomous vehicles. Despite considerable investment in advanced technology, the company has resisted the temptation to spin off these units so far.
Is there a world, can you envision as the Chief Financial Officer, a world in which you say, you know what, there's an old business, there's a new business, we should trade separately?
Well, there's a lot of commonalities between the businesses, right? So it's about 70–80% of the vehicles are the same, right? They both need brakes, they need windows, they need features inside the vehicle, seats, etc. So everything that we can do to make the ICE vehicles more efficient and more appealing to the customer is only going to help us with our EV transformation. And that's why that integrated approach is so critically important to help fund that journey for us going forward.
Investors have indicated that they're along for the journey as well. Since July 2020, shares of North American automakers have significantly outperformed the S&P 500, even after broader economic and geopolitical turmoil dragged them down from their peak.
The last 2 years, they have doubled their commitment to what they're going to spend in electrification across the industry. And a lot of that has been rewarded by Wall Street. The companies will now need to deliver on, or be prepared to deliver on that in a post-supply chain constrained world.
Part of your job is to make sure that Wall Street is getting the message that you want them to have about General Motors. Where are you in that right now? Where is General Motors in the perception on Wall Street of the extent to which it really is a tech company on the forefront?
You know, I think the challenge with what we did is we put out 10-year goals. That's something that was kind of unheard of in the industry as well as here at GM. And now what we've got to do, the next phase, is make sure that we're giving a roadmap to investors out there to say, here's what you can expect to see in the next 2 to 3 years. And as you see that, you should increase your confidence that we're on the journey to get where we need to be in 2030.
The Wall Street perception of this changes almost weekly or monthly, which is fine. Our goal is nothing more than execution at this point. As we produce and execute, the confidence will grow. Nothing is going to take us off track from that execution. We know we have the right strategy, so that will come.
This is about the long term. We're not running the company for the stock price today. We're running the company for value creation over the long term, and I feel like we've got a really, really good hand to play.